Hi guys, I'm Ben and welcome to Motivation to Invest. Our mission is to motivate you to invest for your financial freedom by providing you with valuable investing tips and strategies. Now, I've received a number of requests from you guys asking, is the stock market about to crash again? Now, the fact is, nobody knows. Random, unpredictable and black swan style events just can't be predicted, or they wouldn't be random and unpredictable. Now, a variety of different stock market analysts and economists are issuing contradicting statements online. Now, some analysts are making valid points by pointing out that the stock market has actually risen despite the economy still being halted and in a deep freeze, with mass unemployment and government debt at an all-time high. So in this video, I'm going to explain why many analysts think that the stock market could crash again and what is the best investing strategy to get through these uncertain times. Let's dive in.
Coming in, flex, I just wanna win.
Before we get started, go ahead, smash that like button and subscribe if you haven't already. Be sure to turn the notification bell on, that way you'll get notified when I release future videos and stock picks. It's good to be first on the scene when an interesting stock is at a great price. The recent global pandemic saw the stock market crash massively as panic reigned and fear gripped investors. The S&P 500 was on its longest bull run ever in history of 11 years, until on March the 23rd, it all came crashing down as it fell by over 34%. Over in the UK, the FTSE 100 also had its largest quarterly fall since Black Monday in 1987. This was a fall of 25%. Then in the recent weeks following the crash, governments and central banks from around the world have pumped trillions of dollars into the economies in order to keep them afloat. The US Federal Reserve released its largest ever stimulus package of over $2 trillion. Over in the UK, over £30 billion was pumped into the system as part of a stimulation or financial survival package. We've seen employees being furloughed and offered 80% of their salary, while businesses were given grants and loans to keep them afloat during this tough time. Moreover, many business taxes were deferred to the following year, and the Bank of England base rate was dropped to a record low of 0.1%. So how did the stock market respond? Well, the stock market responded really well to this wave of stimulus packages released into the world economies, with the S&P 500 in the US rallying and the FTSE 100 in the UK. So are we on the road to recovery? Well, we're not out the woods yet. All this money which is being pumped into the economy is merely propping it up. All this stimulus money has to come from someone, and there are no free lunches in this world. If the bank keeps printing money, this can lead to a whole host of economic problems, such as hyperinflation. This is when so much money has been printed that it effectively becomes worthless. This happened in Germany between 1921 and 1923. Which saw the German currency, the mark, effectively become worthless. This was triggered by large debts from World War I, which Germany was ordered to pay, amongst a host of other economic issues. Long story short, things got so bad that it actually cost 4.6 million marks to buy a loaf of bread. And people were throwing money in the street because it was so worthless. They eventually solved this issue by scrapping the old currency and bringing in a new currency called the Rentenmark. So could this happen again? Well, you'd hope that economists and governments would have learned from the 1920s. But even just a couple of years ago, we had the same problem in Venezuela. Now, the job of the Bank of England is to keep the inflation rate at 2%. And that is also the job of the Federal Reserve in the US and other central banks in the world. So far, their measures seem to be working. But the Bank of England is having a tough time with so much money being printed, and no one knows for how long this will go on for. The fact is, the world economy is currently being propped up by money which is being pumped into the system. This is a little bit like if your car breaks down and your friend says he can give you a push. Now, for a short time, your friend's pushing the car and it seems like you're making great progress, but you know it's just not sustainable. Your friend will need food, he'll need water, he'll need energy, he'll need rest, and he can't keep pushing you forever. At some point, you're going to have to start that engine or give up. This is the exact same situation with these government stimulus packages. There are no free lunches, and although it seems good in the short term, with businesses being offered grants and employees being offered 80% of their salary, it's just not sustainable over the long term. At some point, we've got to start the economic engine again. In the words of the great Isaac Newton, every action has an equal and opposite reaction. Ray Dalio, one of the greatest investors of all time, has also come out and stated that we are at the end of the long-term debt cycle, which lasts approximately 60 to 80 years. Thus, a potential crash or market depression could be on the horizon. So what's the solution? Well, it's known that you cannot predict the unpredictable, and these random black swan events can come out of nowhere. However, what you can do is prepare for every eventuality. My favourite style is to take a low risk, high reward strategy, which many of the great investors follow. Now, I've noticed there have been three types of investors during this time. The first were people like me, who saw the opportunity, they saw the market drop, and they got in there early. They invested hard and built up a nice portfolio of stocks. The second type of people are the traders. They love the volatility, and they'll be taking full advantage of the ups and downs of the market. Then you've got the third type of people, and these people are the ones that are waiting on the sideline. They've read the economic analyst reports, and they think the stock market is going to crash again. And when it does, then they're going to buy in and take full advantage of the bottom of the market. Whatever your strategy, you must be aware that no one can predict the unpredictable, not even economists. Your best bet is to prepare for every eventuality and diversify your portfolio across a variety of assets and buy and hold for the long term. So will the stock market crash again? So what do the analysts think? Well, the analysts come in two camps. The first camp are those that think the market will crash again very soon due to the economic issues mentioned previously. The other camp thinks that we are set for a V-shaped recovery. That is, the stock market is going to fall fast and rise even faster. So how long did previous crashes take to recover? Historic data shows the average bear or depressed market lasted 11 months, while the average bull market lasted 30 months. If you were invested through both these times and didn't sell, on average your portfolio would lose minus 26% every bear market and gain 110% when the market recovers. So it's good to keep that in perspective. Now, although past data doesn't predict future results, it's some of the best information we have. So what's the alternative? Well, let's say the fearmongers are right. The economy stays halted, the stock market goes into a deep depression, and we get hyperinflation with the value of paper money going to zero. Then your money, which is in the bank, which you did not invest, will also be zero. And the governments will also have major problems on their hands. Also, in a hyperinflation situation, the asset prices of things are inflated. So if you own property, that will inflate in price. And if you own any other assets, they will also inflate in price. So in the worst case scenario, holding a lot of cash will not save you. Even if you look at the bond market, with interest rates so low, it's pretty pointless holding bonds. And Ray Dalio thinks it can even have a negative effect. So what does this mean? This means that all that money which is in the bond market, the trillions of dollars which is just sitting there, will have to go somewhere, as people won't want their money being devalued. So there's only a few places it can go. It can go into property, or it can go into the stock market. And when that money comes flooding in, the prices of all the stocks will increase massively. So what if there was an even worse event? What if nuclear war broke out, or there was some major catastrophic event which literally destroyed society as we know it? Then would it be wrong to be investing in the stock market? Well, I don't think so. Because in one of those situations, you will have worse things to worry about. The only backing and value which comes from paper currency is from the governments. And if the government collapses, or there is a major issue such as war breaking out, then that government is no longer backing the currency, thus the currency can become useless. That is why all the wealthiest people in the world have a variety of assets diversified internationally. They have oil fields in Iran, they have property in the US, they have property in the UK, they have stock market investments, they even have gold. They split their portfolio and their wealth across the entire planet because they know things can be unpredictable. So what do I think? Well, I think we need to put this situation into perspective. 200 years ago, the US didn't even exist. This situation is not as bad as World War II. It's not as bad as the Great Depression in the 1920s. I believe the stock market will recover in the long term as it has done so many times before. And this is just another one of those opportunities to award those contrarian investors. Warren Buffett also agrees, where he spoke at the Berkshire Hathaway shareholders meeting. So what am I doing? I'm following Warren Buffett's investment strategy with a little sprinkle of Ray Dalio in there. I'm buying and holding assets for the long term. I'm going to ride the waves and ride through the bumps and then reap the rewards. In the wise words of Warren Buffett, time in the market is greater than timing the market. Trying to time the exact bottom of the market is pretty much impossible. I will hold my current positions in the stocks despite profits being on the table already. I will also be looking for new opportunities. And should the stock market crash again, I will be looking for opportunities to buy stocks in great companies. Now the key there is great companies. Not every company will survive this crash, and not every company will come out on top. However, some will. And that is where you need to do your research. Not every cruise line will survive, and not every airline will survive. But the ones that do will give you big rewards. My method is to take a low risk, high reward approach, not high risk, high reward. Ray Dalio, one of the greatest investors of all time, offers a great method of diversifying your portfolio. I'm diversifying my portfolio across a number of sectors, both nationally and internationally, with no more than 1% of my portfolio exposed to any individual stock. So if that company does go bankrupt, I've only lost 1%. I will also be keeping a cash reserve to invest into property once this is all over. Now remember, this is not financial advice, and I'm not advising anyone to go and plow all their money into the stock market. Instead, you need to assess your own financial goals, your risk tolerance, and only invest what you can afford to lose. Don't invest any money which you might have to pay bills with or use in the short term. So do you think the stock market is going to crash again? And how are you preparing your portfolio? Comment your thoughts below. Want to know my favourite stock picks of 2020? Check out my playlist below, which includes many great stocks that I personally have analysed and invested in. Also, if you want a free stock worth up to £200, you can get one of those by signing up to the free trading apps using my referral link below. I recommend Trading 212 if you want to activate your account fast. And if you enjoyed this video, go ahead, smash that like button, and definitely subscribe. See you next time.
Coming in, flex. I just wanna win.